Good morning, everyone. My name is Greg Bordenaro, and I'm the editor of the Hartford Business Journal and New Haven Biz. Thank you for joining us this morning for our Economic Outlook Forum. This morning's webinar will begin with brief remarks by each of our panelists, followed by a deeper panel discussion. We'll take a look at the short and long-term economic outlook for the region and state, and uncover insights about what the economic indicators are saying and what the future might hold for Connecticut's economy, including broader trends and key factors that employers should know about. Attendees are welcome to submit questions during the discussion today, and the Q&A box that you see on your screen is the way you do that. I'll try to answer as many of those questions as possible. We're going to be going for an hour today from 10 to 11, so I'll please submit those questions, and I'll get them as I can. Please also note that this webinar is being recorded, and a link will be shared with all attendees after the event. Before we kick things off, I'd like to thank NBT Bank for their support for this webinar as our presenting sponsor. Making this forum happen takes a lot of planning, and we appreciate the support we've received from them. Here to say a few words on behalf of the bank is Connecticut Regional President, Andreas Kapitanopoulos. Welcome, Andreas.
Thank you, Greg, and good morning to everyone. NBT Bank is proud to sponsor today's economic forum, which will provide insight into some of the hot economic topics that are top of mind and directly impacting all of us, particularly small businesses. We have a terrific panel, and we are pleased to be able to include the perspective of NBT's chief economist in support and conversation. NBT Bank is committed to Connecticut and focused on making a positive impact on the community. In addition to establishing our Connecticut regional headquarters in West Hartford and a full service branch in downtown Glastonbury, we created 17 new jobs and filled them all with local talent. I'm also very proud to add that we were able to support 50 local nonprofits through financial donations last year. NBT Bank's footprint in the Northeast covers 7 states and encompasses a network of 140 locations. With $12 billion in total assets, we are a top 100 bank in the U.S. Thank you, and back to you, Greg.
Thank you, Andreas. Appreciate it. Now I'm going to briefly jump into the results of our annual Economic Outlook survey. During the month of November, the Hartford Business Journal and New Haven Biz, in partnership with NBT Bank, released this survey and asked our subscribers to weigh in with their predictions for Connecticut's economy. The survey was emailed to over 10,000 HBJ Today and New Haven Biz subscribers. The good news is, despite the threat of the Omicron variant, HBJ readers are more optimistic about 2022 than they've been in a long time. In fact, 66% of HBJ readers said Connecticut's economy will improve this year. Last year, only 42% of HBJ readers predicted the economy would improve in 2021. Meanwhile, 71% of our readers think the state's economy is in better shape today than it was a year ago, while nearly 50% say they plan to hire additional staff in 2022. That, of course, doesn't mean there aren't challenges. The labor shortage, which our panelists will discuss in more detail, remains an issue. 46.5% of our respondents said they can't find qualified workers to fill open positions, while 55% of respondents said they will have to raise wages this year in order to attract employees. Meantime, despite concerns about office space downsizing, nearly 65% of respondents said they don't plan to make changes to their office space in 2022. Yet, 70% of respondents said they will allow their employees to work from home this year on a full or part-time basis. If you're interested in seeing the full results of our survey, you can go to our website at hartfordbusiness.com. For now, I want to move on with the rest of our program by introducing each of our speakers and giving them 3 to 5 minutes to talk about the top issues that they think will impact the local, state, and national economies in the year ahead. I'd like to start out by introducing Kenneth Entenmann, who is the Chief Economist and Chief Investment Officer at NBT Wealth Management. Ken?
Well, good morning, Greg, and thank you, everybody, for joining us today, and thank you for having me. I think there's room for optimism for our economy, both in the state of Connecticut and broadly, really across the globe. I think the reasons behind that optimism, regardless of what the Federal Reserve does or what central banks do, interest rates will likely go up, but they'll probably still be negative even after the Federal Reserve goes through their rate hikes. So there will continue to be massive liquidity impacting our economy really for the foreseeable future. Second, consumer balance sheets are as strong as they ever have been. The amount of cash that consumers are sitting on has never been higher. If you think about it, if you haven't refinanced your mortgage when interest rates were below 3%, I don't know where you've been, but so in short, consumers have tidied up their balance sheet. They've reduced the amount of debt. They've refinanced their debt. They're sitting on a boatload of cash, which is really positive. And I think it makes it a very stark distinction from typically when we're in a crisis and we're in a recession. Those are not the cases. Debt's going up, cash is scarce, and that's just the opposite. So really strong consumer balance sheets, big positive for the economy. The same can be said for corporate balance sheets. Similarly, that they've cut expenses due to COVID. Corporate earnings are spectacular. The debt levels have gone down. So we have lots of money stockpiled both on the consumer and the corporate balance sheet. And quite simply, there's just pent up demand that once we get a better understanding of COVID, and I don't think it's ever going to go away, but I'm going to use the word manageable. And much of my thoughts on the economy is that COVID will become more manageable. I think there's an enormous amount of pent up demand that will help fuel the economic growth going forward. That being said, there are still plenty of risks out there. COVID obviously being one of them. We've had a couple of head fakes in 2021 coming out of the original COVID infections. We thought we were kind of clear of the infection in the spring, and we saw a really remarkable recovery in the economy, only to get hit with Delta in August and September. That caused a significant slowdown in the economy. And then that rolled over pretty quickly as well. And then we thought we had an all clear signal. And then Omicron came and hit us. And we're just starting to come out of it. I think my view is that COVID is going to become more manageable, but we certainly can't rule out that there are additional variants coming, and they could perhaps be much harsher than what we've experienced so far. I think the biggest risk that I would highlight is inflation. As I think we all know, inflation is trading at pretty high levels. Historically, it's close to the highest it's been in the last 40, 50 years. Our consumer price index is running at 7%. The producer price index running at 9.7. Really problematic. In my opinion, I'm much more sanguine on inflation going forward. I think it's going to remain a problem where I think the Federal Reserve and a lot of the politicians will say inflation is going to return back to low levels. I think for a number of reasons, supply chain disruptions, I think will continue. They'll get better, but I think they'll continue. We'll talk about the labor market. I think that's going to remain problematic. And I think energy prices are going to remain high. And I think that's particularly important for the New England marketplace in Connecticut specifically. Thirdly, I think we've stockpiled a huge amount of debt in paying for all this emergency COVID relief. And we haven't quite got to the point where we want to talk about paying for it. The Build Back Better program that was in limbo in Washington had a number of tax increases. So I think we've had the benefit of massive liquidity, but we haven't had the discussion of how we pay for it. And taxes could adversely affect the economy. Geopolitical risks, Ukraine, Russia are on the headlines, but I think tensions with China are also there and can pose a risk for the economy. And then lastly, and most importantly, is how does the Federal Reserve react to this high level of inflation? And the big concern is that they take it too far and squelch any kind of economic recovery. So reason for optimism, but lots of concerns out there. Hopefully, as we go along, we'll have a little bit more time to talk about the labor and inflation issue. But for now, Greg, I'll turn it back to you.
Thanks, Ken. Now I'd like to introduce David Lehman, who's the Commissioner of the Department of Economic and Community Development. David, welcome.
Great, Greg. Thanks so much, and Ken, that was a good segue here. I'm gonna really focus on three things and talk mostly about Connecticut. Take a quick look at the past, and then talk a little bit about what I think is an optimistic future for the state and for the state economy. I am going to share a few slides here. Promise not to bore too many folks. As I said, and Ken made a few comments about COVID. I do think we're at a point now where we're entering the third year of this pandemic. We know so much more about this disease and how to manage it. Certainly there may be more variants and there's uncertainty and risk and everything, but our knowledge base now is so much greater. And if we look at the data, we see how important vaccines are, right? Between 2 out of 3 or 3 out of 4 people in our hospitals really consistently have been unvaccinated or not fully vaccinated. So the vaccine is by far the biggest mitigant. And that's one of the reasons we're not talking about restrictions and things like that. And we're making sure the economy continues to stay open. And I'm very optimistic about that. As I mentioned, this is one slide. I want to talk a little bit about employment in Connecticut, and this is backward looking, but I think it is. I get asked a lot about, how did Connecticut fare during the pandemic and the recovery from the pandemic, and this I think is the best slide articulating that. So specifically, we indexed employment in Connecticut, the country, and surrounding states to pre-pandemic levels, and then look at what happened during the pandemic. So the U.S. is the purple line here. That's at the top. Connecticut is the red line, and our neighboring states are the other 4 lines. So really 3 things I want to point out as it relates to this. In 2020, the Northeast, as folks know, was hit so hard, really the hardest by the pandemic at a time when we didn't have vaccines. We didn't know a lot about the risk of the virus, and there were lockdowns. But if you think about what I think of as kind of the balanced response from Governor Lamont and the administration to the pandemic, you can see that in these numbers. So things like keeping manufacturing and construction open, on lodging and restaurants and accommodation. Many states went from open, closed, open, closed. We really tried to keep consistent rules, even when there were restrictions in place. And then lastly, we were one of the first states, certainly in the region, to eliminate all restrictions in the spring of 2021. And I mention that because when you look at the employment numbers, we lost a lot of employment. We still have not recovered full employment. But if you look at Connecticut's employment relative to neighboring states, really for a 1.5-year period there, we did outperform. The whole region underperformed the country. Again, lots of reasons for that. We're very densely populated, hit the hardest initially. But we've seen these other states catch up here over the past 6 months. So that's something we're tracking. But I do think you can look at Connecticut's employment numbers through the pandemic as a positive in terms of navigating that. I think largely due to some of the policy initiatives and the balanced response to keeping the economy as open as possible. All right, so enough about the past. Let's talk a little bit about the future. And again, I promise only 3 main slides for me here. This is something which hasn't gotten as much press. I saw an article recently about it, and maybe we'll talk more in the panel session, Greg, on this. But business formation continues to be on a tear in the state of Connecticut. 2020, and this is 12-month moving average going back a decade. We have a little bit better information right now, and we can discuss what this means in terms of job growth and job formation prospectively. But 2020 was a record year for business formation, only to be exceeded by 2021. And I certainly expect this line to temper here, but the great resignation, people doing new things, different things, businesses adjusting or being forced to adjust given the pandemic, I think all of that's contributing to this. This trend is not unique to Connecticut, but the slope of this line, I think, is so significant. Connecticut has long been an entrepreneurial, innovative state with very highly educated workforce. I think we are well suited to see lots of new companies grow and thrive in the state. And if you look empirically at these business formation numbers, you're seeing that. So we'll continue to track this. But small businesses, startup businesses, they are some of the biggest hirers. And obviously, some of these businesses will not succeed. But I think this is a real positive when I think about employment and economic growth going forward in the state of Connecticut. Last thing I really want to touch on is the state budget, and certainly in my role, very focused on budget, fiscal situation, both short term and longer term. But I'm constantly reminded, when I was in the private sector for 20 years before this role, I just didn't focus on it as much. And I think it's really important to make sure that we get the word out. How strong certainly the short term or short to medium term fiscal situation is in the state of Connecticut. Longer term, we still need to deal with unfunded pension liabilities, which I believe are manageable and will be managed. They were created over really 60 or 70 years when we didn't pay for our pension obligations as they were being created. That started to change 12 years ago, and now we're making incremental pay downs to those obligations. So just quickly here, fiscal 21, that's almost a year ago now, or 7 months ago, we had a $500 million surplus. New numbers came out yesterday, fiscal year 22, which ends this June 30th, a projected operating surplus of over $1 billion, and it could be significantly more than that is forecast. For example, in the updated revenue data, where's this money coming from? It's more revenue and then less expense by and large. But it's not just income tax revenue. It's income tax revenue, some of which is associated with capital gains, but you're also seeing it in sales tax growth. You're also seeing it in corporate income tax, in addition to real estate conveyance taxes. So broad revenue growth that continues to outperform month over month. Again, you can't extrapolate that indefinitely, but another significant surplus forecast for this year, and that'll be our third year of surplus. We also have a rainy day fund that will reach 4.9 billion when you get above 15%, as many may know, but if not, when you get above 15% of the state's operating budget, there is a pay down of the pension obligations. And that is what we saw last year. There was a $1.6 billion pay down of our approximately $40 billion of unfunded pension liabilities. That is in addition to the mandated payment that's made every year towards those pension liabilities and the amortization of them. So we will see, and I'm sure there will be a discussion at the legislative session, how much of the surplus this year will go to more pension pay down versus tax relief, for example. And that's a debate that has already started and will continue as the session begins here February through May of this year. And then lastly, and I don't think we talked about this a year ago in this session, but you don't need to just take my word for this. Connecticut saw bond rating increases by all four credit rating agencies this past year. And that's something we hadn't seen in 20 years. So the near-term surpluses, fiscal management, rainy day fund, Connecticut's in a very, very strong position. It's important that we continue that strong fiscal management to deal with our longer term issues, again, which I think are manageable, but I really think it's important that that message continues to get out there because it's just such a very different situation than the state has been. And I think sound fiscal policy and consistency for businesses and families is critical to continued investment and growth in the economy. That's it for me, Greg. Back to you.
Thanks, David. Last but not least, I'd like to introduce Garrett Sheehan, who's the president and CEO of the Greater New Haven Chamber of Commerce. Garrett, welcome.
Thanks, Greg. Appreciate it. And really glad to be able to be part of the program today. I'll just briefly talk about some of the things that we're really keeping our eye on right now in New Haven. Growth has been great in New Haven. We had a lot of really good announcements in 2021, whether it was expansion of Tweed Airport, direct flights to Florida that have been doing really well, announcements from companies expanding, and that seemed to carry through with 2021. And I feel like the future continues to be bright for Greater New Haven, not just the city itself. January strikes me as a really difficult month. I know a lot of our small businesses, restaurants are having a really hard time. It's generally more of a slow month, but then you add on top of it the Omicron virus, and it seems like it's just really been slow. So we're talking a lot with our restaurants, our small businesses about how they can make it through this month, because things had really started to pick up and improve, not all the way back maybe to 2019 where we were before, but I think this is a really challenging month for many of our businesses. And if we can get through this, we've already seen, it appears we've seen the peak of Omicron. So we're on the other side of it, but we need to get through this month, which again is normally a slow month to begin with. Workforce continues to be a big issue with all of our employers. Positions they have right now, but also those positions of the future, how we set Connecticut up to be competitive into the future, because workforce, as we can see, is such a driver of the decisions that companies are making. And if we here in Connecticut have a really talented workforce that matches the needs of the companies that we're trying to recruit, trying to retain, then we're going to be successful doing that. So at our chamber, working very closely with the state, with the Office of Workforce Competitiveness, Governor's Workforce Council, on programs to really identify the employer's needs and make sure that we work with our education workforce partners to make sure that we can match those up with what the companies are looking for. We've got a few innovative programs that have been successful around the country that we're starting to implement, and working on bringing those into more effect in Greater New Haven. Last thing I'll say before we open up for the questions is, as we do see all of these dollars that are available, whether it's from the state or cities or the regions, I think of, how do we make smart investments? Because we obviously, as a state, are not the only ones that are getting this money. Every state, every community has seen an influx of federal dollars, stimulus dollars, that can go to transportation, that can go to different economic development projects. So as those are starting to roll out during the course of this year, and obviously a lot was already spent in 2021, one of the things that we're trying to add as our voice is just how do we make smart investments that really carry us forward in our region going forward into the future. That we do things that really do advance economic growth, and it's not so much of a one-off, and we're sitting here in a couple of years wondering what happened to all of those dollars. So we want to see more opportunity and access. We think a lot about inclusive growth. A lot of it is talking about how you develop the pipelines, talent pipelines to deliver for our workforce, and then infrastructure. We continue to be advocates for Tweed, even though we've had this commercial success now with the flights to Florida. We do want to continue to grow that airport within reason. It's always going to be a small airport, but just being able to have those business flights as well and make sure that it meets the needs of the passengers. And then also thinking a lot about high-speed rail and how we continue to improve the rail system, which is so vital through New Haven with the New Haven line, but also we have the Hartford line and continue that connectivity between Greater Hartford region and Greater New Haven. So again, excited to be here and talk on any of these topics.
Thanks, Garrett. Now I'm going to open up the conversation to our full panel discussion. And again, people who are listening in the audience, feel free to submit questions and I'll try to get to them as we go along. So if everybody could come back onto video and get off of mute. I want to start with, everybody mentioned the Omicron variant as, having an economic impact. David, I was wondering if we could start with you talking about, what seems as Governor Lamont has had a more hands-off policy in terms of restrictions on businesses. Can you talk about, where the policy currently stands and how the administration's thinking has changed since the start of the pandemic?
Yeah, thank you. I think the short answer is there are no restrictions on businesses. The towns have the ability to impose a mask mandate if they want, and some towns have done that, and some businesses have imposed their own mandate, and that will continue to be the case. And I think that's the policy for a couple of reasons. Two main ones. One, it is my strong view, and I think we can debate this here, but 2 years into the pandemic, whether it's yourself, Greg, or others, people have their own view and their own comfort level of what they're willing to do or not. So people have their own risk tolerance. We know a little more about this virus. So, when if I say wear a mask or do something else, I just think compliance with that, even if we felt that was the right strategy, I have questions about without it. So I think that's the main point. The second point, though, that really complements it is we know so much more about what mitigates this virus and acute illness and serious illness here. I mentioned the vaccines before. If you just think about the numbers, the amount of people in Connecticut that are fully vaccinated relative to those that are in the hospital, it is amazing, how effective this virus is at mitigating hospitalization and death. The vaccine is at mitigating hospitalization and death. There are therapeutics as well that are out there. So we just know so much more about how to keep people from getting seriously sick. I think a combination of 2 years into this and the mitigating factors and interventions we have, there's not a need for more than that.
Sure. Thanks, David. Workforce. Everybody's mentioned workforce as well, and we know it's you can't miss the headlines no matter where you're reading these days about workforce shortages. Ken, could you talk a little bit about is this workforce shortage overhyped? Is it real? And how do we get out of that? How do we get out of this the mire that a lot of employers are in terms of finding talent?
Well, it's certainly real. It's pervasive, and it's not unique to Hartford or New Haven. It's everywhere we go. As Andrea said, we're in 6 or 7 states, and every client we talk to has that issue. I believe that the labor issue is going to take a while to fix. And, when you look at the unemployment rate at 3.9%, that's pretty low. When I look at the Connecticut rate at 6%, that's much lower than where it was, but there seems to be room for improvement. And when I look at Hartford, the unemployment rate's 4.8. So again, looking at Connecticut versus the rest of the country, there's room for improvement. And I think that's a positive. There's room for improvement. However, I think the labor problem is going to be more persistent than what many think about it. And there's a couple of reasons for it. So if you look at, we have a government statistic called the JOLTS index, which is job openings and labor turnover. So it's the number of people who have help wanted signs. And then they track the number of people who voluntarily quit their job. So generally speaking, if you voluntarily quit, you're got a better offer someplace else. So it's called the JOLTS index, and it shows that there's about 11 million, 10.5 million job openings in the United States today. when you look at the unemployment numbers, the number of people who are unemployed or those who have dropped out of the workforce in the COVID crisis, that number is somewhere in the neighborhood of 8 million. So you would think this would be an easy math problem to solve. I got 11 million job openings and 8 million unemployed. That's easy math, right? But I think the COVID crisis has changed things. And I think that these numbers will improve, but my fear is it may take longer. So first, if I look at that 8 million people who are no longer in the workforce, either unemployed or out of the workforce, about 2.5 million of those people were making more money in unemployment than they were in their previous job. This is primarily low-income workers. And a big area that's been probably the most hit by COVID is in the leisure and hospitality. So you're thinking about bartenders, waitresses, hotel cleaning staff, people who work in restaurants, et cetera. And for a long period of time, the government, these people were making more money in unemployment than they were working. So people can criticize that, but I think they're making a perfectly rational economic decision. Now, I think a lot of those programs have begun to roll off. So the enhanced unemployment benefits that came from the federal government rolled off in the September time period with the Build Back Better not going through. Some of the child credits have gone away, and depending on what state you're in, some of the rent moratoriums are still in place. And so these are all things that enable people not to come back in the workforce. I think that those reasons are diminishing, and hopefully those 2.5 million people will start to re-enter the workforce. Another significant area of that 8 million is roughly a little over 1 million to 1.5 million people basically entered retirement early. So when you look at the trend for retirement, a lot of people in the middle of COVID, for whatever reason, healthcare reasons, they just said, you know what, I'm going to cash out. And when you think about it, as bad as this crisis is for a retiree, the two biggest assets that they have are their 401k or retirement accounts and their home. And home prices are up roughly 20%, and we all know the stock market has been up, is up pretty materially, up almost was up 28% in 2021. So the value of the assets of the typical retiree has gone up, and that's enabled them to cash in earlier for retirement. I think it remains to be seen whether these early retirement people come back into the workforce. I think some of them are going to find out retirement's not as cheap as you think and may be forced back. But again, I think if you look at that 1.5 million, it's going to take time for them to come back, if they come back at all. The next area is immigration, a hot political button to talk about. But when you look at just legal immigration, the government had bigger things to do in the middle of the crisis. So immigration, whether you're talking about green cards, temporary workers, is about 1 million people fewer than where it was pre-COVID. So there's another 1 million people. And then lastly, and this speaks to David's chart on new business startups, there's a whole bunch of people who were working for companies that decided to become self-employed. So just a generic example, if I'm working as a bartender at a local hotel or a local restaurant and that restaurant's been closed, I may have taken that opportunity to start a landscaping business or an electrical business or some other business. So I'm now self-employed. Well, what that means, and that's fantastic, and hopefully they will multiply that and hire more people. But what that means is that bartender is no longer available for that local restaurateur to come back and say, well, come on back, we're open now. And therefore that puts pressure on wages because now I got to pay up to find my new bartender. So I think self-employment is critically important. And then lastly, the whole issue of childcare, the virus itself, people who are just either afraid from a health perspective of going out in the world with COVID out there, or people who, and it's particularly true for female employees who take the primary load of childcare. If their childcare facility is closed down or don't have enough people, those people can't go back to work. So for those reasons, I do think the employment numbers are going to get better. But I think because of those reasons, I think wage pressure is going to continue to be a problem, which is going to continue to put inflationary pressure on the macro economic environment. And I think it's going to take a lot longer to kind of work this out than what meets the eye.
Sure. David and Garrett, could you talk about the local Connecticut impact of the workforce shortage? Which industries are seeing the most impact? And are there any policy responses that could help alleviate this, or is it bigger than that?
Yeah, I'm happy to go very quickly here, and then Garrett can jump in. You know, I agree with much of what Ken said. This is not a Connecticut issue unique to Connecticut. This is a nationwide issue brought on by the pandemic, and I think that it's multi-factor in terms of why we're here. I like to think about, you know, what's structural and what's cyclical. I mean, what has changed perhaps indefinitely in terms of how people work or what they're willing to do. And I do think a good portion of what we're seeing is a structural change. People potentially doing new jobs kind of early. Maybe they realize that was the wrong decision. But in terms of where there are worker, you know, from a policy perspective, first off, this is across the board. So it's not just restaurants and bars that are having trouble or hotels. You're seeing this in professional organizations and white collar workers. You know, there is tremendous demand for talent. You know, and listen, I think the supply chain shortage, some of the fiscal and monetary response by the federal government, I think, did precipitate some of this. So again, lots of reasons why we're here. I think the best thing that we can do, and one of the main things that the state's focused on, is you know, the workforce strategy, the Career Connect T. I think Garrett alluded to it before, but there's $110 million to focus on reskilling and upskilling workers. So making sure that we're working with industry led by the private sector, whether it's manufacturing, technology, you know, healthcare, et cetera, to make sure that we're training people for the jobs where there is availability, and there's funding for that now in ways that there hasn't been in the past. So continuing to work closely with the private sector and provide, you know, the workers through this reskilling initiative, I think is going to be the main thing that we're going to keep doing. And then the cyclical aspects of this, as COVID goes, you know, in the rearview mirror, more in the rearview mirror. Certainly, we know there's seasonality to COVID coming up with the spring, summer, and fall are going to be much better. You know, I think that will help as well. So it's going to be a multi-pronged effort there.
Yeah, and just trailing on what David said, I mean, definitely in New Haven, the hospitality workers are key critical for, you know, you can go into any town, you'll see a restaurant where they say, hey, closed on a certain day for lunch because they just didn't have staff. So, you know, we've all experienced that. We'd like to be able to get back to a position where those restaurants, hotels, other locations can operate at full strength. What David's talking about with some of the workforce strategies, and this is something we're a big proponent of, is, you know, how do we enable the employers to be in the lead and tell everyone what they really need. And so we've been using a program developed by the U.S. Chamber of Commerce. It's called Talent Pipeline Management. But really, it's bringing together employers in an industry, empowering them to identify what the challenges they're facing, then put those forward, identify the positions that they have the most critical need, and then work their way back through the talent pipeline. Where do they get people right now, and what are the core skills that everyone needs for those positions? Understanding that each business is going to have a little bit different specificity of what they actually need. But if we can talk with a common language to the talent providers, whether that be a community college, even high schools, or our workforce investment boards, then that starts to clarify the workforce pipeline and how we can get talent into those key positions. So it's a more organized approach. It doesn't change what we actually do for workforce, but working together instead of, you can go around, you can see with our different universities, you know, different employers will have different one-off kind of relationships, and we want to have more holistic opportunities for all employers within an industry to fill the needs that they have.
Sure. David, I want to go back to the business starts data and the business formation. You know, a lot of those business starts could be one-person proprietorships and things like that. Do we have a sense of who's starting these businesses, and, you know, how do you get that, you know, beyond just a one-person shop opening up an LLC to a company that's going to hire 5, 10, 15 workers?
That's right. And you don't know, right? Because there's even if it was a technology company that could be the next Microsoft, hypothetically, right? They may only be 1 or 5 people right now in terms of the coincident economic data. So you don't know. So I like to think about this from a macro perspective. And if you look, you know, on businessct.gov, and there was an article about this earlier this month, some folks do indicate what industry their new business, their new LLC is going to be in. Others don't necessarily say. So I think you're really trying to compare apples to apples, though, LLCs or other formations of other structures, now versus empirically. We know some of them are businesses that are seeking to grow jobs, but we're just looking at the number of businesses. And the reality is the more business starts we have, and there were 40,000 over the most recent 12-month period, or even a bit more, I think. The hope is that whether it's 5%, 10%, or 20% of them, that you do see real job growth. But you're really going to need to see that. You're not going to know that until it happens, and we start tracking that more. So that relationship we're going to be exploring a lot more as we see these businesses hopefully continue to grow in the state.
Ken, any thoughts on business starts data from a national?
Yeah, so I just agree with David. It's very difficult to determine whether and I agree with him that it is across the board on all levels of skill. I mean, we look at some of our technology companies in high skilled areas, and they are desperate for people as well. I can tell you, I had a conversation with the managing partner of a law firm recently, and they have been searching for a senior estate planning attorney for over a year and a half and can't get them. And the prices are astronomical to try to attract somebody to join their firm. So it really is across the board. And I think it is even more problematic in states that have higher taxes and more hostile, business environments. And David and Garrett have talked about the environment you have in Connecticut being pretty nice, but a lot of these self-employment people are pulling up stakes and moving. I was looking at a discussion about California this morning, where and you look at just the U-Haul index, where how many U-Hauls are being rented to go to Texas or Arizona or Florida or other more favorable tax states, and there's an exodus happening out of California as an example, and the article kind of said, well, it's less than it was last year. And if you read on, it's because there weren't enough moving vans to move out of California. That's why the number went down. So there's a lot of moving parts to this. It's not just, my example of the bartender starting their own business was just a generic one, but it's across every skill set, every level of income. This problem is persistent and pervasive. And again, I just don't think it's something that's going to fix itself overnight. It's going to take time. And the primary way that you attract new labor is to pay them more. And that has implications for our national economy. And particularly, it puts a lot of pressure on the Federal Reserve, who's trying to balance this. How do we recover from COVID when we have inflation numbers that are elevated? I don't envy Jay Powell. He's got a pretty difficult conundrum to solve.
Hey, Greg.
Sure. Another.
I think to Ken's point, we need to continue to make Connecticut attractive to employees too. We're in this remote work world. A lot more people now can get hired for a company that's based here, and they could be living anywhere in the world. But as we transition back to more in-person work, I think we need to be recruiting to employees themselves. Obviously, they're going to come if there's a job opportunity, but the situations where they can be an entrepreneur as well, we want to make Connecticut the most attractive place to be. And I know with DECD, there's a focus on cities, on communities, how we continue to invest in them to make them attractive.
Yeah, Garrett, that's a good point about sort of the future of work. I have this as one of our topics. It's a question further down on my list, but let's just go there right now. David, where does the state view the future of work in office versus hybrid, and how the state needs to attract companies in that sort of environment?
I think, and here's an area where my opinion really over the past 12 months has not shifted. I think the future of work is, there are some companies that think it's still in person 100% of the time. But I think the majority of the companies, and you referenced some of the data before, there is flexibility, whether that's 1 day a week or 3 days a week. I'm not sure. The state, we were going to go back 50% of the time. Now we're back remote even a bit more than that. So it really depends on the company. And ultimately, the war for talent, I think, will be a factor here in terms of understanding what the worker wants. If they want 4 days remote, and that's important to them to take a certain job, money being another factor, as Ken mentioned. So the punchline is, I do think the office needs are going to be less. You can't say if that's going to be cumulatively 10% less or 25% less. I know some folks in the commercial real estate industry disagree with me, but I feel pretty strongly that you're going to see less demand for office space because it's going to be more efficiently utilized. And that gets to this conversation of, in places like downtown Hartford, where there has been some structural vacancy, I think we need to see more conversions, and I think we need to see more residential. I think that's key. But from the state's perspective, going back to the second part of your question, Greg, what does that mean in terms of how we attract people? Well, we used to just focus on companies, and the old adage of wherever the CEO wants to live, well, you need to talk to the CEO, and that's the state, and that's how the decision will be made. I think it's much more, even companies we're talking about in recruiting, half or sometimes all of their workforce is remote. So where I'm going with this is I think there needs to be a real focus on the individual, on the family, on the worker in terms of attracting them. So things like the marketing budget that we have right now, trying to attract new residents and maintain the new residents that we've gotten, that's really, really critical. And then things like broadband and accessibility, and this gets to housing affordability as well. All of that goes into the calculus, in addition to a lot of the stuff that we love about Connecticut in terms of great education, healthcare, and quality of life. But it's going to be much more focused on the individual, the recruitment, as opposed to just the CEO or the company. And I think that's right.
Garrett, how has the current work environment impacted New Haven, downtown New Haven? It's a little bit of a different office market than Hartford. So could you just talk about that and what you're seeing there?
Yeah, definitely. New Haven's been active. Again, January slowed down a lot, but if you look back to December, there was a lot of activity, people coming out shopping. There is already a lot of residential, and there's a lot of density of the universities in New Haven, so that makes a big impact. Not as much office space, but we do see those situations that David's talking about. Every employer has some new work situation where it's definitely not everyone in the office every single day of the week. I can even just notice it in when we do events, and we were able to do all of our events this past year in person, but our attendance numbers were off, not by a lot, but off for every event. And I don't think it was because people were afraid of COVID. I just think that they're not as committed that they're going to be in downtown New Haven on any given day, and therefore I'll go to the chamber event and then I'll go into the office. I think it's really kind of up in the air for a lot of people on where they're going to be each day given their schedule. And so that creates a lot more uncertainty, and it does require more on us to make downtown exciting and a place that people want to come to, not that they're just there for work and then they go over to a restaurant, but it's an experience. And I will say, for the restaurants, even if you went into downtown New Haven in the evenings, there was a lot of energy. There were a lot of people at the restaurants and going out. But again, we don't have that full force of workers that are there every day. It gets better each month. I don't know, though, that we'll ever be back to where we were before.
David, I want to go back to the topic of business recruitment. I know the DECD and Governor Lamont have announced some wins of new companies coming to Connecticut. Could you give us an overview of that? And where is the state focused in terms of bringing in new companies? Which industries, which parts of the state? Can you just give an overview of that?
Yeah, and it's always risky and tough to generalize here, especially succinctly. So if you look at, if I was to do that, and I'll try, certainly COVID helped the state from an individual migration and a business migration perspective. So some of that was companies relocating from New York City. Some of that was companies relocating even from Lower Westchester into the Stamford area. And that's been a combination of, a Fortune 500 company, technology companies, fintech companies. And that's really what you've seen in Greenwich, in Stamford, and in Lower Fairfield County. As you move towards New Haven, and Garrett mentioned some of this, there has and there continues to be, significant leasing and growth of a lot of its existing businesses, like our Venice, for example, but in the bio space where, we thought 101 College with 500,000 square feet would address some of the lab space need. It feels like there's a need for even more lab space there, and we want to make sure that continues. So the kind of eds and meds market focus on bio in particular. And then, manufacturing has been a critical backbone of Connecticut. You've seen a couple manufacturers, whether it's innovation centers and kind of their kind of 4.0 centers, like Ranpak, for example, in Shelton, and then GE Appliance, which is actually owned by a Chinese company now, did one of these in Stanford. We're trying to cultivate more growth where we feel like it can compete in Connecticut. So it's really been across the board. I think there has been a downstate lean, just given what we've seen coming out of New York in particular. But I want to be clear though too. The focus from us at DECD and our partner at Advanced CT, we're really looking to help companies that are already here, or new ideas that are already here, grow. So in my mind, high retention versus recruitment, I think we want to make sure that our existing companies are here, are happy with the service they're getting, if you will, as clients of the state, and are able to grow in here. And that's what we're going to continue to do as we think about it. But it's really going to be industries that we think can and will compete in the state, like, again, manufacturing, technology. I think there's a huge opportunity in financial technology in particular, in life sciences and healthcare.
Sure. Garrett, could you talk a little bit about the growth of the bioscience sector? New Haven's seeing a lot of boom from there. You got new office buildings or lab buildings being built. Hartford hasn't seen an office building get built in decades. You've got that going on in New Haven. Talk about the future of biotech and how that's going to drive the New Haven economy.
Yeah, it just continues to grow. I've been around New Haven for a long time. I can go back 10 years ago, and we thought we had a cluster of companies, but that cluster now has doubled or tripled in the last 10 years, and it just continues to expand. We're at that point, someone leaves one of those bioscience companies, they go off, start their own, and then that starts to grow. And not all of those are successful, but people are getting to the point where they know, hey, if this position, this opportunity, this company doesn't work out, there's another company that's going to be starting up. There's another large business here that I can join. We always, for so long, have looked to just Alexion as that big anchor, and they really are for us in New Haven. But now we have Arvinas, Biohaven, and other companies that have really reached that critical point of where they're expanding. And we have the traditional, Pfizer. People think of Groton, and that's obviously their huge location, but Pfizer has a New Haven location in New Haven as well. So that's a good facility for them. And also, I think, I always try to think of Connecticut. It's not just New Haven's very small. When you think of the lines of the city, people outside of Connecticut don't think of it as just New Haven. It really is this synergy of even pulling from Farmington, pulling from Ridgefield, where Boehringer is, pulling from Groton, pulling from Stanford. We are starting to form a cluster amongst a statewide group now, too. And I'll just add one thing to what David was saying, and economic development's my background, and I agree with him. Business retention expansion is the biggest bang for the buck that we can do in the state. That's what we're seeing, the growth in bioscience. A lot of these companies, they're already tied here to science, that maybe is at Yale or UConn or one of these other companies. And so it's really about fostering their growth and keeping them here. And I think for so long, that's one of the things we haven't done a great job of in Connecticut, is really letting companies know that we're really excited they're here and how can we help. David's done a great job along with Advanced CT of getting that message out. And that's something that we try to do at our chamber as well.
Sure. Ken, can you talk a little bit about supply chain issues? Where are we at with the supply chain crisis, and how we fix it?
Yeah, well, I think it's going to take time. I think there was a general sense that the supply chain issues would kind of quickly go away once we got through the holiday season and that peak demand for shipping. And it's proven to be much more challenging. So I think it's going to get better simply because the profit motive is going to have people produce more. So for example, Intel has announced two fabrication plants in Arizona to the tune of $20 billion investment to increase the capacity for fabrication plants here in the United States, and a good part of it focusing on industry other than what we would think about as just plain computers. But the auto industry is a huge demand, has a huge demand for semiconductors. So as that comes online, that's going to help alleviate. It's going to help alleviate some of the supply chain issues. But I also think it's going to be more persistent and more difficult. So, for example, when you look at just truck drivers, a lot of the truck drivers are those self-employed people who left being truckers and went into some other business. They're not coming back, and there's roughly an 80,000 truck driver shortage in the country. We have a shortage of trucks, so it's going to take longer. And I think we do have so some self-inflicted wounds when it comes to the supply chain. For example, anybody who's tried to buy an appliance like I have in the last 6 or 10 months, I've had to buy two, an ice machine and a microwave, will find out there's a 6-month delay, and the prices are through the roof. Well, part of the reason why the prices are through the roof is the U.S. has steel tariffs. Home prices are up 20% because materials are short, but we have substantial timber tariffs that prohibit the flow of supply into the country. So that's one example. If you look at another example, when it comes to truckers in California, one of the hot spots is the Port of LA. Well, I call it the Uber rule, but California ruled that Uber drivers couldn't be independent contractors, and therefore they had to be on a company payroll. Well, the same thing was true for a lot of truckers were independent contractors, and now they have to work. So that limits the amount of the supply of truckers. The government has also instituted new rules in terms of trucking, how long a trucker, how many consecutive hours. So those are just examples of, I think, self-inflicted wounds. So I think the supply chain will get better as production ramps up to meet demand in areas of chronic shortage like supply chains. But I think it's going to take a lot longer to fix. And if you look at the Port of LA, that was a hot topic prior to Christmas, the threats of stealing Christmas or stealing the holidays. The number of ships anchored offshore are still over 100. And part of that is, again, self-inflicted in terms of legislation that restricts the amount of land that can be utilized for storage of containers, things of that nature. So I believe that the supply chain issues, while I think is the easiest of the three things to fix. So when I look at inflation, I look at the supply chain, I look at labor, and I look at energy prices. I think the supply chain is most likely to improve the fastest, but it's just not going to flick the switch and get better overnight. And I think we need to examine some of the restrictions we have that kind of prohibit the supply chain from operating more efficiently.
Sure. Here's a question to anybody who wants to take it. Related to the supply chain issue, there's been some talk, and we've seen some examples here in Connecticut of the supply chain issue sort of awakening to manufacturers, in particular, this opportunity to reshore operations, bring some of their suppliers closer to where they are. What is reshoring, particularly for manufacturers, going to be a trend, and does it offer opportunities for Connecticut?
Well, if I can take it first, I think you're already seeing it, and I think you were seeing it prior to COVID. In particular, in the high-tech space, which Connecticut has its share of, and the semiconductor issue is really kind of front and center on that front because, a very substantial amount of capacity lies in China or Taiwan. And when you look at the geopolitical risks and then you look at the tariff, trade wars, et cetera, lots of companies were already anticipating moving or onshoring, re-onshoring manufacturing capacity. And my example earlier of Intel saying, okay, we have increased demand for semiconductors because everything now has a semiconductor in it. Your refrigerator does, your microwave does, your car does. So that makes sense. But that onshoring of semiconductor capacity was occurring pre-COVID. And then when we had the disruption in the supply chains, it only accelerated that. And then if you look at China and you look at the geopolitical risks, you look at their, to me, it amazes me that China is trying to make itself more hostile to foreign investment. But, given the rules and regulations and the kind of the crackdown that they've had on businesses in China, that's even further incentive to move onshore. So we've gone from a world where manufacturers operated with just-in-time inventory and the supply chain and the whole COVID and all of these things have added up that I can't do just in time anymore because I can't get short for 4 months or 5 months at a clip. So what does that mean? How do you fix that as you onshore some of the manufacturing and component parts? And I think it's inevitable, and I think it will be a trend, and I think it's an opportunity for any state or regional municipality, whatever, to kind of take advantage of that trend that existed before COVID, and COVID only exacerbated it.
David, any thoughts on the Connecticut impact? What are you seeing or hearing?
Yeah, no, I agree. It's an opportunity. You're seeing reshoring, and I think you're seeing it in two areas. And I think with Connecticut, the one thing we need to be mindful of is, and this was mentioned before, is the cost of energy here. And I think some of this is structural in terms of where we are in the country and just the generation costs. I think whether it's semiconductors in the example, the Arizona example that I mentioned, I think where you're going to see manufacturing capacity, and there's some projects that we're working on right now looking to expand in the U.S., where we think the kind of Connecticut cost structure in terms of labor, electricity, and the whole envelope can be competitive, we're going to be pursuing that. So that is one area. I think it will continue, and the other offshoot to this, and this you're seeing more activity in Connecticut right now, is the warehouse and logistics space is going to increase because you're going to see more inventory as opposed to kind of the just-in-time 1 or 2 months. Let's highly tuned. You're going to see some more, whether it's raw goods being stored or completed goods being stored, and I think that the state is well positioned for that. Just given where we are and the density of the population within a half-day drive of this region. So those are the two areas, and we're going to keep competing for it.
And David, stick with you. Offshore, you talked about energy costs. There's a lot of offshore wind activity that Connecticut's sort of in the center of. What could that do to energy costs and also opportunities for maybe Connecticut manufacturers to supply that industry?
Yeah, I think so. Wind and more sustainable technologies. And again, this is, I think I always, when I'm careful when I say this, because I think there's sometimes it's a perception that's going to happen over a year or two. I think the shift over really the next 20 to 30 years, and I think it'll ebb and flow. You're going to see whether it's wind, solar, other renewable power. I think those are going to be the two most prevalent in Connecticut. We obviously have a big nuclear plant as well right now, but I do think there's going to be opportunities from a supply chain perspective, from a servicing and maintenance of wind perspective, as that transition happens. But again, we want to play the long game here, and we want to do that. And there's an opportunity right now, actually, with chasing some federal funds that we're working on with Rhode Island and Massachusetts as well. So this should be a regional play, but I think it'll be beneficial to us over the long run to invest in this infrastructure.
Sure. We only have a couple of minutes left. So I just want to maybe conclude the conversation with, if everybody could just go around, what's the biggest opportunity in the year ahead that you view for businesses that people should pay attention to? I'll give you a few seconds to think about that. Ken, you want to kick us off just for 30 seconds to a minute each here?
Yeah, so I would go back to my introduction, and I believe that we've spent most of our time talking about all the risks and perhaps some of the constraints that are on the economy. But I would go back to say there's still a massive amount of liquidity in our economy, and that's going to remain the case for the foreseeable future. We have the strongest consumer and corporate balance sheets really in history. And therefore, I think there is just this gigantic stockpile of dry powder, if you would, for economic growth. And I would encourage everybody to think that way. I don't know when COVID's going to go away. I don't think we'll ever have an all clear sign. But as I think all three of our panelists, once it becomes more manageable, and the hope is we're kind of right on the cusp of declaring it not a big problem, I think there's an opportunity for significant economic growth. And I would encourage people to think that way, because once we kind of get through this constraints and restrictions and masks and no mask, once we get there, and I don't know when that is, I hope it's soon, I think there's a gigantic stockpile of economic ammunition ready to be spent. And it's just kind of waiting for that opportunity. And I think everybody should be preparing for that opportunity. Whether it comes next week or 3 months from now, I don't know. but I think it's a huge opportunity for everybody.
Sure, Garrett.
Yeah, I hope that this year we can get back to more steady state of business. I think back to last year, and we were waiting for the tsunami of everyone would get the vaccine and everyone then would be traveling and restaurants would be packed. And to Ken's point, I think we're at a new phase of this now. We can kind of get back to business. Hopefully we're at the tail end of Omicron, and this is the way things are going to be. We're going to have to deal with different parts of COVID as it's out there, but not waiting for the other shoe to drop and really get to a steady state of business. And on the government side, that all of these different stimulus programs, we can really enact them to make positive change for Connecticut's growth trajectory.
David, want to finish this off?
Yeah, I was just saying, I see we're at time. So I listen to what Garrett mentioned in terms of the continued progress that Connecticut's made in terms of fiscal health, really GDP growth versus where we've been and job growth where we've been. And to continue to make sure that we're branding Connecticut as a great place to do business, because I think there's been real improvement there, and more progress will take some time, but it's happening. Making sure that word is getting out, and then secondly, I think the hybrid worker, the remote worker, continuing to attract residents in the state, and that's not just at the state level, at the local level, making sure that we're building housing and the types of housing that new residents want, really critical to the state's long-term success. And ignore the housing need that is significant out there, and we need to welcome growth in the state.
All right, we're out of time. I'd like to thank all of our panelists, Garrett, David, and Ken, gives great insights. And I'd also like to thank again our sponsor for the event, NBT Bank. And thanks to our audience for joining us. As I mentioned at the start, we'll share the post-event details along with a recording link. So if you want to go back and listen the next day or two. Other than that, have a great day, everybody.
Thanks everyone.
Thanks.